Right, everybody, super quick one today. It is the daily crypto roundup, and we've got a few things to get through. We're going to be talking about the digital asset space and risk on assets. We're going to be talking about the big meeting that is coming up tomorrow at Jackson Hole, and obviously the Fed's going to be there, various different other central banks, ECB, Bank of England, etc., etc. And the market is pretty quiet ahead of that meeting because everyone will be thinking and trying to pluck out any type of information that they can get around potential rate hikes. My personal opinion is that we will have 50 basis points this coming September, although we will see what the data reveals later on in early September. In regards to inflation, and that figure will play a big impact into what certainly the Fed will do. Things are completely different, although be it somewhat similar in Europe. I mean, the Bank of England, will continue to have to raise rates. They just have to, even though their balance sheet is not great. Debt to GDP, I think, is over 100%. They have to service that debt. There's massive problems around people having to pay mortgages with higher interest rates. It's all a mess. And then Europe's a completely different kettle of fish. It's just crazy. So, without further ado, things are a little bit quiet, like I said, around risk on assets, crypto. Things are pretty flat. A little bit up for the past 24 hours, to be fair. Bitcoin 1%, Ethereum up 3.42%. We're going to be touching on Ethereum and Ethereum whales as they start to move holdings onto exchanges, which is interesting ahead of September the 15th merge. BNB up 2.6%, neither here nor there. Cardano 1%, down for the week 13. Solana's up 2.36%. We've got a little celebration. We can celebrate that. Little win there. Down 11.98%, 12% for the week, though. Not going to talk about Doge. Polkadot, 1%. Matic, Polygon, yeah, all pretty much same, but different. Although Ethereum Classic's up 10%. Okay. So without further ado, obviously the merge with Ethereum from proof of work to proof of stake is going ahead on September the 15th. And this is from Cointelegraph. Ethereum whales move holdings onto exchanges before merge. The top 10 Ethereum non-exchange addresses have seen 11% decline in their holdings, while on-exchange whale addresses have seen a 78% increase over the past 3 months. And obviously Cointelegraph mentions the merge date is scheduled for September the 15th, and we hit a 6-month high of over $2,000 but failed to consolidate the critical resistance. And obviously there is a lot of bullish sentiment around Ethereum because obviously of that switch to proof of stake. We've seen the price go from, I only know it off the top of my head, in British sterling, from around 860 British pounds back in June to currently $1,700, around about 1,400 British pounds. Now we've seen it raise, it was pretty much near enough double ahead of those lows back in June as well. And some tweets here. Crypto Rover, I think your Ethereum will drop so hard on merge date. The hold anticipation is getting not bought up on the spot market but on the futures market. Be warned. And obviously we've been trying to get to this proof of stake transition since December 2020, which is will pretty much be nearly 3 years. 2 years since the whole process began. So we will continue to monitor that and see what happens there. And then whilst we're onto Ethereum, slightly different viewpoint here from CoinDesk. Ethereum leads crypto recovery on merge confirmation, but traders remain cautious. Buying Ether ahead of the merge is likely to be an overextended play, one trader said. And like I mentioned before, things have been a little bit quiet on the front, although Ethereum's up 3% today, just ahead of tomorrow's meeting at Jackson Hole. And everything seems to, I feel like I'm rabbiting on about central banks, but everything is evolving around central banks at the moment, and they are in an incredibly difficult place, even more so in Europe, not only because of inflation, but also because of this crippling energy cost that is slowly starting to sweep across Europe. I say slowly starting to creep across Europe. It has literally taken Europe by the grip. I know my energy bills have pretty much 4x'd, which means if I'm culling back on my spending, then the chances are a lot of other people are doing the same. So what will be interesting is keeping an eye on consumer sentiment to see how that plays out across Europe, and seeing what I always feel like good leading indicators in terms of how our restaurants making money. Are people deciding to stop eating out? How is manufacturing doing? Is big manufacturers like glass manufacturers, who are very resource heavy driven and they need a lot of energy to create that glass, how are they doing with these energy costs? So we'll obviously continue to monitor that as well. And in a little bit of nonsense news, not that it really matters because it doesn't, but BitBoy Crypto says he's dropping defamation suit against fellow YouTuber, and he said that he didn't realize it would become public. We're going to drop the lawsuit 100%. I'm sorry it became public after he sued him for defamation in a November the 8th video titled "This YouTuber scams his fans, BitBoy Crypto." So it's neither here nor there. It does not matter. And in some economic data, we're going to go for today. We have seen US GDP come out. We've seen German GDP come out. We've seen so GDP for the US, which is super important, came out at quarter to 0.6, slightly down from slightly up, from consensus of negative 0.8. So again, we are technically in a recession. 2 negative quarters of GDP growth have been negative. We've got initial jobless claims for the August 19 week, which is not too much of a problem. It is slightly down actually from the previous 245k, but really we're looking for the month for jobless claims, because that has a big impact on what the Fed will also start thinking about in regards to raising interest rates. And here we have Jackson Hole meeting as well. So in Wyoming, which is super, super important. So shifting gears somewhat to the US government 2021 revenue versus expenditure, and all these numbers are billions. I saw this on Twitter and thought this is incredibly interesting, because what we've got ourselves into here is basically a debt burden that is unsustainable to some extent. We'll obviously keep printing money, which is good for Bitcoin. We also have the issue around we are going into recession, if not technically we are in a recession in the US. So corporate income taxes will be reduced, capital gains taxes will be reduced, because obviously the market has been declining, so people are not going to be taking capital gains. And then a slowing economy has impacts on customs duty, excise duty, estate and gift taxes, etc., etc. But the big one is individual income taxes, which obviously, if people are being made unemployed because companies are cutting back, then obviously we'll see individual income taxes come down, and that makes up the individual income taxes and Social Security Medicare taxes makes up 4 billion. Sorry, is that 4 billion or 4 trillion? 4 trillion. and the deficit is 2.7 trillion, which is crazy. And here we have on the right what the US expenditure is. And we see income security, social security, health, national defense, which is 755 billion, which is insane. The interest on debt is 352 billion. I think I'm reading that correctly. Education, what seems like is incredibly low, is 297 billion. Surely that should be higher. Education. Veteran benefit, that's crazy, 234 billion. And then we got some lower ones down here, like energy is 6 billion. Agriculture is 50 billion. Administration of justice, 72 billion. And a few other ones there as well. So that is very interesting. And then finally, two final things to touch on. This is from Liz Ann Saunders, who's very good on Twitter. Pending home sales fell. This is the problem that the Fed's got in regards to raising interest rates. Pending home sales fell 22.5% year over year in July, which is among the worst readings in history, and in line with declines following the great financial crisis as well. So I think you can see that from my screen there, which is crazy. So we had that back in 07, 09, obviously what happened in 2020, and we are back to those levels as well, which is insane. And then finally, we've talked about this, and I certainly have talked about this over and over again, but it's an ongoing issue that is not getting any better. And this is from Javier Blas. While lots of EU, UK governments officials are on vacation, the region's energy-intensive industry is shutting down before our very eyes. A day doesn't go without a new metal smelter, a glass company, a fertilizer producer, a chemical group announcing output costs or closures because of those unsustainable energy prices. And I think today we saw from yesterday, I think German megawatt per hour electricity cost was €700. Today it's 750. It just continues to keep going up and up. And governments around Europe and the UK will have to start stepping up to figure something out, because surely this is not sustainable, and this will have a massive impact on manufacturing and a massive impact on retail. So we will monitor that very closely. So that is everything for today. I will see all of you tomorrow. We've got Jackson Hole meeting, which is super important, so we're going to be keeping our eyes on that, and a few other bits and pieces of economic data, which of course all impact risk on assets and US equity markets and everything. Okay, thank you guys. Take care. Bye-bye.